This easing is being described as targeted with the goal of stimulating housing and consumer spending. How effective do you believe this is going to be in the short term? And either way, what comes next?
Yeah, that's a good question. So what we've seen over the past week is almost a wave of modest, and honestly, it has been modest monetary stimulus being unleashed. We saw today that the loan prime rate on the 1 year and the 5 year term was reduced by 10 basis points. Look, that's not going to change the status quo that domestic demand isn't roaring back to the extent that policymakers and, economic watchers would have liked when China really abandoned its zero COVID policy. It was expected that we would see, households, businesses really exuberantly spending and investing again, but that hasn't taken place. So what policymakers are needing to do is really release targeted stimulus to, prevent that bearish sentiment that seems to be, gaining traction from taking hold further. So we do expect that we will see further fiscal stimulus.
You mentioned we were expecting the consumer in China to start spending at a pretty rapid rate. Why haven't we seen it so far? What's going on in China that people don't want to spend?
Yeah, it really does come down to sentiment. I think that, the Chinese consumer was really burned by that ongoing, enduring zero COVID policy. And so now it's taking a little bit more help, a little more hand-holding from the government to get them back spending on services. And so we expect that there will be more support forthcoming from that fiscal point of view to help them get out there and spend again.
Speaking of sentiment, we saw Citi downgrade its forecast for China GDP today. Goldman Sachs also doing the same. Consensus across the board, when we're looking at the big banks, about 0.5% of a downgrade when it comes to GDP forecast. How much of this is that slow COVID or post-COVID recovery? And how much is it other global macro factors? China's obviously a big supplier to other countries and other regions all around the world, especially the U.S. and Europe.
So what we did see was that when China did abandon its zero COVID policy, there was this almost euphoric situation that was quite unsustainable. And I think expectations are now kind of coming back to reality as well. I mean, we've maintained our GDP growth forecast for this year at 5.4%, which is now about consensus. But initially, we were a bit more bearish relative to consensus. And so I think, what we're seeing is that if we do see that stimulus continue to come through, we should see domestic demand stabilize. But that important export channel is going to remain weak because, as you say, we do have those weak conditions in the US and Europe.
Let's bring it full circle to the US, if you wouldn't mind, as we continue to see this slow recovery in China. Even with the easing, what sectors in the U.S. do you see potentially the most impacted negatively?
Yeah, that's a good question. So it kind of remains to be seen from that weak Chinese demand. I mean, there's strong manufacturing links. So I think that's an important channel of impact. I mean, at the end of the day, that's where a lot of this two-way trade between the U.S. and China does happen. So that's going to be an important factor to watch.